Welcome to my morning report on Friday the 19th of August with me, Richard Perry, market analyst at Handset Markets. We have got a sort of mildly corrective move on these equity markets today and a stronger dollar. Now this is sort of coming on the back of comments from Fed member John Williams. There's my chart. It's not even that chart either. Hold on. Bang. Fed member John Williams, and basically he has suggested he's sort of the latest member of the FOMC to suggest that perhaps September is on the table, and talking about the fact that it could be dangerous for the economy for the Fed to continue to remain looser for longer. And that has sort of initiated a little bit of a dollar rally, but as before, is it going to continue? I mean, basically this week has been sort of Fed member driven. Fed minutes on Wednesday, but also we've had some Fed minutes on Wednesday with dovish, but we've interspersed with some sort of hawkish member statements from sort of Dudley, Lockhart, and also now Williams. So that's sort of driven a bit of volatility on the dollar, but certainly still pushing around, but the expectation remains that the Fed will struggle to hike this year. Whether that actually remains the case or not, I'm still thinking December will be when they move, but certainly at the moment the market is sort of unsure and certainly not thinking September. So subsequently the dollar remains weak, and that is the case. But just today it's rebounded slightly against pretty much all the Forex majors, but the question being, will it continue? Now that sort of rebound is sort of stabilised the Treasury yields on the 10-year there and also the 2-year. The oil price is an interesting one. The oil price continues to push strongly higher. It's basically flat on the day today, flat on WTI, mildly lower on the Brent crude, but certainly the rally on oil has been enormous actually since that low that we saw back at just under $40. We're sort of over 48 now, so that's over 20% rally. You sort of suggest that's bull market territory again. So it's a really strong rally that you're getting on oil, and that really doesn't show any real signs of stopping. So that could continue, and that theoretically would be supportive of equity markets or risk appetite anyway. But just for now, the equity markets are just looking a little bit corrective today. Now, in terms of what we've got to look forward to today, nothing really. This is the economic calendar. You're looking at a little bit of UK public sector borrowing data, minus 1.2 billion for the July numbers for the public sector take, and that's not really going to do a great deal unless it's outlandishly different to that. Canadian CPI inflation at 130. Again, has the potential to impact on the Canadian loonie, but nothing really else other than that. Expected to just mildly fall back to 1.3%. So that would be a 3-month low, yes, but certainly nothing too significant in terms of the move there. So not a great deal to bother markets today. I think it could well be fairly set for this dollar strength move continuing throughout the day. So that takes me to my chance today, which is sterling yen. Now sterling had a strong move to the upside yesterday. The impressive stats on the retail sales numbers for the UK showed that retail sales actually improved quite strongly. I think 1.5%, I think it was, month on month for July. Now, considering July was the first clean month of Brexit, that is an impressive number. So sterling rebounded pretty strongly across the majors yesterday, and sterling yen is one such currency that could now be turning the corner. We had that low at 29.22, which was above the 28.80 level, and that's broken the downtrend. We've seen the momentum indicators starting to tick higher, the stochastics crossing higher, close to a possible buy signal. Could it be that it's a similar move to the ones that we saw in July and June? But yeah, close to a possible confirmed buy signal on the stochastics. The RSI unwinding to 38. The unwind in July got back to 49.50 area, so there is room for an unwind. Looking at the hourly indicators, if my chart actually works, come on chart, you can do it. Anyway, not responding. Okay, looking at the hourly indicators, basically they're showing that you've got some overhead resistance levels that are ready to be tested. Here we go. Here's the hourly chart. Ready to be tested. 32.50 is the big initial resistance. That's the 12th of August high, and that was also a key pivot. Now you see on sterling yen that you've got some key pivots. That's 32.50 and 34 figure are the big pivots. There's a very small pivot that you've got zooming in here at 33.15. So you've got some levels that you need to break through, but 32.50, if you broke above that, that would be a key rally high that would have been broken within the downtrend. So I think that would be your initial key resistance. It's sort of backed away from that a little bit overnight. 32.20 initially, backed away from there, but you'd still suggest that the momentum indicators are more positively configured. The RSI on the hourly chart finding support above 40, pushing towards 70. That's not really been seen throughout the selling pressure, so that's an interesting improvement. Also, the MACD lines turning higher from around neutral, again up at stronger levels. So the momentum indicators certainly have turned a corner near term on the hourly chart, but can they sustain that move? You've also got these longer term hourly moving averages that are turning higher and bottoming and turning higher and providing the basis of support. So these are all indicators that would suggest that there is a potential turnaround of the corner. 130 big figure is a key reaction low within the recovery, and also you've got 31.18 or 31.20, let's say, as an initial support from yesterday's sort of reaction low. So you want to hold on to that 31.18, but 30 big figure is the key support for the recovery. Now, just zooming out again, that big downtrend that we saw also providing the basis of support. So this is all sort of pointing towards a near-term recovery in sterling yen. Whether it can break through 32.50 is the big question, and then 34 figure after that becomes the key resistance. So it's an improvement, but it still needs to show signs of continuing that improvement. So I wish you good luck in your trading on sterling yen today, and I'll speak to you later.